Okay, today we're going to be talking about a lot of the hidden trading hurdles that you may or may not know about. Listen, there's a lot of psychological traps out there. We start out at the top, fear and greed. Okay, a lot of I know it's going to be difficult for a lot of you guys, but one of the things I want to really focus on in this video is you're never going to be a robot, and I don't think anyone should. I think being like robotic, like Spock or whatever. Okay, I don't think Spock would be a very good trader because at the end of the day, if you were trading, and that might date me. Hopefully, all of you know who Spock is from Star Trek. But if you're only trading on logic, like you would never trade, you would never enter any of these stocks that have created some of the biggest gains ever. Okay, like think of penny stocks. I mean, 99.999% of penny stocks fail. Okay, so if you were strictly logical in everything you did, if you were a computer, if you were a robot, you would look at that stat and you would say, well, 99.99% of these fail. Why would I ever buy one of those? And you'd be looking at that on day one of the run. So it's an artificial intelligence stock and it's low float and it's heavily shorted and it's got crazy volume and it's ran in the past. All of these things we look for as a day trade. You would be strictly logical and you would say, well, this thing's going to fail. I won't touch it. Meanwhile, that $1 stock, and we've seen this in the AI sector, goes to like $10, same day. Okay, 1,000% move in a matter of hours. Now, 2-3 days later, a week later, it goes all the way back to $1. But that Spock, that robot, that rational thinking human missed a potential 1,000% gain. Now, maybe you buy it at $1 and you sell it at $2. It's 100% gain. Maybe you sell it 3, 4, 5. But the point is, you have to not be strictly logical. Now, the problem is, this is what so many suffer with, is you become the exact opposite. Okay, this is one of the biggest reasons so many people struggle and fail in day trading is you remove all logic. Okay, you start believing the hype. You start believing in these penny stocks. I mean, it's one thing to day trade something. It's a whole nother thing to buy some stock at $1, watch it go to $5, and then stay in it all the way back to $1. And then maybe they do a dilution or some bad news comes out and it drops to 50 cents. So in that scenario, you rode it from 1 to 5, a 500% gain, and then you take it all the way to a 50% loss. And hopefully you've never done that. I've seen it. Okay, I've seen people message me. They're like, I'm down on this thing. I'm like, well, when did you buy it? And they're like, they give me the day. And I'm like, how are you down so much on this? It went up, 500% that day. Oh, well, I never sold. I'm like, okay. And then the next day it was red. I'm like, and the next day it was red. And I'm like, you never sold anywhere new? Well, I thought it was going to come back. I thought there was going to be more news. And I'm like, well, number one, quit trading these things until you can figure that out. And number two, have realistic expectations. You're up 100, 200, 300, 400%. Even if you're up 20%, okay? If you're up 20% on something that's running and it starts reversing, look at the 5-minute candles, look at chart price action, look at volume. I mean, all these things we look at. And if you're not exiting, then you need to figure that out and fix that. But it's only your fault if you're still in after that run. Now, that is not logic either. Okay, you go back to the robot. The robot wouldn't do that. The robot would have bought that stock, and if the robot did get greedy, it would at least stop out for a small gain, or worst case, stop, break even. So I think you need to balance the idea of recognizing other people's fear and greed, other people's mania and emotion, and balance that out with your own logic and reasoning and not have unrealistic expectations, not look for home runs, not break your stop losses, not fall into all of these emotional things. I mean, how many of you have gone through that cycle where you get all fired up about this stock? You absolutely love it as it's going up. And then all of a sudden it reverses and now you hate it and you hate it and you hate it. Well, love and hate has nothing to do with making money in the stock market. What we're looking for is patterns that have repeated in the past, setups that have repeated in the past, that we can take small and repeatable profits from. And when the trade doesn't work, small losses, okay? And that is that disciplined approach to always having a plan. I think that's one of the biggest things that can remove emotion. I tell every single trader that's struggling with this, emotional roller coaster, the biggest thing you can do right away is have that plan before you enter. And you can believe in the hype, you can recognize the price action, you can recognize the hot sector and all of these things, but before you actually take action, before you enter that trade, you know what you're going to do. So that's kind of the crux of this video is I practice and I teach and I recommend a hybrid approach, okay? You can be emotional and there's nothing wrong with being excited about opportunity. We like making money. That's why we're here. You can be emotional, excited, and fired up about that idea before entry. But once you hit that buy button or that sell button, okay, listen, a lot of people get twisted up on the short side because they're like, it's a trashy penny stock. It's a trashy penny stock. This is junk. This is junk. And that's great, 2 weeks from now when it fails. But if you get squeezed out on 1,000% run, it doesn't matter how junky the stock is. So this applies long or short. You can hate the stock, you can love the stock. You hate it, you short it, you love it, you buy it. But before you enter, you know what you're going to do if something happens. Think of conditional statements, if then else statements, okay? If the stock does this, I'm selling, okay? I bought it $1. If it goes to $1.30, I'm taking profits. If it goes higher, so be it. Vice versa, I got 30% risk or 30% reward. I'm gonna risk 10 cents to the downside. I'm gonna stop out at 90 cents. So now, if you follow the plan, that's up to you. If you have a little bit of discipline, just a little bit, you now have been able to remove the emotion from the idea. And you only act if a criteria is hit. So if it hits your goal, you take profits. Hit your stop, you move on. If it trends sideways, you should always have a plan for that. Remember, if it is most of you are probably trading these lower priced, more speculative stocks. I would always tell anyone, if it just tracks sideways during the day, it's also an exit. And now you can sell it 3:59 p.m. if you want, okay? But, these stocks do crazy things in after hours and pre-market. So even if you bought it $1 and it's at 101 or 99 cents, you might say, well, Tim, it didn't hit my goal, it didn't hit my stop. Clear it off, okay? Don't overnight volatile stocks. I know it's tempting, but don't do it. So have a contingency for sideways as well, which would always just be exit before the 4 p.m. close. Remember, it's some of them gap up, awesome, but most of them gap down, and there's no edge there. Like your edge is in riding that momentum, whether it be to the upside or the downside. Sideways price action, and this is a trap a lot of people fall into. Sideways price action is a red flag, like long or short, because the stock is undecided. You don't want undecided stocks. The reason we trade these huge runners, these volatile stocks, is they make explosive moves. And if the stock isn't making an explosive move, what's the point of being in it? You're just holding and hoping, okay? And this applies long or short. You're in this sideways stock and you're hoping some news comes out. You're short it, you're hoping an offering comes out. That's all it is. Hope, hope, hope. Remember, hope's not a strategy. The more hope you can remove, the more just, irrational, emotion, the better. So, biggest thing take away from this, guys, is understand how to build a trade plan and stick to that plan. Now, I gave out a couple hypothetical trade plans. I understand, it sounds way easier than it is. Like picking an area to enter. Tim, how do I know where to enter? Picking an area to stop out. Determining your risk and reward based on those two levels, based on the technical analysis, based on the chart. It sounds way easier. For the semblance of this, 8-minute video, there's a limit to what I can pack in. Now, what I can do is invite you to join the Daily Income Trader System webinars that are 100% free. They vary from an hour to an hour and a half, depending on how busy the day is. Sometimes they're 2 hours long. They're 100% free, and they go on all through the trading day, even on weekends. Morning, evenings, midday, 100% live, showing you the chart patterns and writing trade plans and going through setups. So it's one thing. Maybe jump on one of the webinars and you don't trade the stock, but you will see one of the hosts actually step through picking these levels, and you can learn from that. Like, I know everyone wants to make money today. Everyone wants a Lambo today. Everyone wants a yacht today. Everyone wants it today. I understand that. But your number one job as a new trader is to learn how to trade, okay? There's no shortcuts. Maybe you're closing this video right now because you want a shortcut. Sorry, there's no shortcuts. Now, if you understand that it takes some time to learn this and you learn through repetition like anything, I don't care if you're learning a language, if you're learning mathematics, how do you learn Spanish? How do you learn algebra? You do problems. You do repetition. That's what we do every single day in the Daily Income Trader System. You can check it out, get a tour, 100% live. Click that link and hope to see you there.